from our exploration of business registrations to visit the critical destination of tax planning. 31 March has just rolled over and now we're heading very quickly into the end of the financial year, which is 30 June. So what is tax planning? Well, tax planning is where we look at your current business's performance this year to date. We forecast to June, so we've got the whole year, and we go, right, this is what the profit's looking like, this is what tax you're looking like you're up for, what can we do now to reduce that? And nearly all tax planning strategies need to be implemented and undertaken before 30 June. There is no point trying to do it after 30 June. So today I'm going to walk you through my top 15 tax planning tips. So here we go. Number 1, are you in the right business structure? Because let's face it, by that I mean sole trader, partnership, company, trust. The type of structure that you're in pretty much will dictate how much tax you're in. If you're in the right structure, it can be possible to split your business profit over more than yourself, so around a couple of taxpayers, which helps save a lot of tax. Number 2, if you are using a trust, which is great if that's good for you and they are able to split income, they must document the way that profit is distributed by way of a minute. So just a form that says this is the distributions, but the kicker is if that minute is not done before 30 June, the trust is taxed at 45%, which is the highest tax rate in Australia. So we don't want that to happen. So you must do that before 30 June. Number 3, if you're in a position to do so, defer your income. Instead of invoicing out or collecting some receipts on 30 June, wait until 1 July because then you're pushing that income into the next financial year rather than bring it into the 2014 financial year that we're in now. Number 4, on the other side, where you can, bring forward expenditure. Now, I never say to clients, go and spend money on stuff that you really don't need, because that's just ridiculous. But if you're generally needing stationery, business cards, marketing material, do it in June. Don't do it in July and August, because then you're bringing that deduction into this financial year instead of next financial year. Number 5, if you're in a business that has stock, so you're buying and selling goods, the way you value your stock is really important. Make sure you do a stock take at 30 June, but there's 3 ways that we're allowed to, under the tax legislation, to value your stock. We can do a comparison of those, and you can actually choose the one which gives you a better tax result. So generally, the lower that your stock is valued, the lower your profit for the year. So they're things that we can look at if you have the documents there for us to do that. Number 6. Let's talk about superannuation. I think everyone of you know that I love superannuation. What can we do with super before 30 June? Well, nearly everyone can make a contribution up to a total of $25,000 a year that you can claim a tax deduction for. If you are 59 and over now, that's $35,000. Now, you don't have to be in business to dump a lump sum in to get advantage here. Even if you're a salary and wage earner, you can arrange with your employer to salary sacrifice extra amounts into super, which just means you're saying, look, instead of giving me this much in my net pay, put it straight to my super fund. Now, a lot of people don't understand how super can help. This is how it helps. When you make a contribution into super, it's taxed inside the fund at 15%. Now, the highest tax bracket in Australia, which I mentioned before, is 45, with Medicare levy 46.5. So if you can get a tax deduction on a super contribution at 46.5, and you're only paying tax on it in the fund at 15, you're saving up to 32.5% there on those contributions. So that's how you're getting the tax saving. Number 6, continuing on with superannuation, if your income is under a certain level, you can put in up to $1,000 and the government will kick in $500 just for putting it in. So if you're eligible, make sure you take advantage of that and do your contribution before.